It absolutely crushed. And what did that? Hey traders, another wild day on Wall Street to say the least, right? It's a really rough one today with a lot of twists and turns, and things didn't melt down like we thought. They also didn't rally like we thought. So it's a little difficult to trade. We took some money out of some trades on the short side, got out of the way, and then we just put them on into rallies. I'll get into a couple of those ideas later today, give you some understanding of what we're doing. But let's take a look at this. I want to give 5 ideas for tomorrow going into option expiration. So the very first thing I'm going to say here is I'm actually looking at this as a long. Besides 1987, and we all know what happened in 1987, we don't have anything on record where we have Walmart down this amount in 3 days. There's just nothing on record like that. So we're really grossly overdone, and you can see that by the RSI, which is showing a 16, which is probably the lowest reading it's ever had. It may actually even be lower than the pandemic. So let's just take a look at that, see if it actually is. And it's actually lower than what we just recently had. And let's go all the way back to the pandemic, and it's actually lower than the pandemic, which is kind of crazy when you think about it. Stay to the end because we're going to do the indexes, and there's a key level that you need to watch on the bond market. Now, if we're looking at this, you can't possibly look at that on a technical basis and say that that looks good. So what we have to do is we have to kind of map the trade out in our head before it happens. So the level that I'm going to want to see is I'm going to want to see this at 121.78. If you can flip 121.78, we're going to take a look at this. We're going to see if we can get over that. Now, the selling is getting exhausted, and we're going to throw in the volume and take a look at this. There's your volume, and we're going to get rid of the RSI now. So you can see that we're starting to get exhausted. How can you see that? The selling is less every single day. What's another sign that you're exhausted? So what you're going to do is you're going to take the close and you're going to go to the previous open and you're going to get 8%. You're going to go to the close and go to the next open. You're going to get 2.5%. So what you're noticing and what's happening here, and this is a really good way to measure 78 basis points. So if you look at these, let's get rid of this line. If you look at these, it's a really good way to measure whether or not something is getting exhausted. The selling is slowing down, and on top of that, the gap downs are getting smaller. So it's a matter of time. I'm not telling you to buy this for long term. I'm saying that I think there's a trade here. If you can get over this line, then the first spot that we would be looking for would just be to get all the way back up to this number, and then it could roll again. But there could be 7 or 8 points here very, very quickly. And you don't really have that much downside. Maybe you have $2, $3 of downside by the time, let's call it 3 by the time you're in there. But that can get you to 128. And then you could kind of see if you could even rebuild from there. Get you up and in the trade, which is what we're looking for. But technically, you can't look at this right now and say you see something that makes sense, because there isn't. But you're starting to see signs of that with the RSI where it is, the amount of selling slowing down, and how the gaps are slowing. So you might want to remember those 3 things for future ideas. Now, before we get into some of the earnings, let's talk about the earnings today. Cisco was a disaster today, and we knew this was coming. We went over it last night. Look, very simple trade, shorting off the open and just going from here. I did an RSI video. I'm going to link it at the end, but I'm going to just show you one of the things that we're doing in the trading room. It was like a war out there today, but just scalping more than anything, just pulling a couple dollars out here and there. One of the key things we're doing, and I'll just throw this out there and I'll link the RSI video. Every time you're popping over this line and then rolling back over, okay, when people are saying that they can't figure out how they're going to make money on these, right? How am I going to make money in a choppy market? This is how you make money in a choppy market. You take what you can get. Whatever the trading gods will give you, you take, and then you move on. And that's what we've been doing. It's been working. It's been working quite nicely, actually. So something to consider. But on a longer term move, if you see, and also learn your patterns, but if you see this break 41.03 tomorrow, which it very well could, there was no rally in this today with some of the other names. You break 41.03, I think you're heading to 35. Very simple trade. Break 41.03, and you're looking to short it. And I'd be looking to short more than options right now. If you want to do puts, do next week because it's option expiration. And you might even want to do them closer to the close. Now, Apple's one that we talked about yesterday, and we laid this out very clear. If you break this close, short it. If you did that, you're up $3 today. Very simple trade, right? We batted this around all day today, I'm going to show you this again because this is clear as day. So again, that RSI video, here's a negative divergence. It gave us an entry into it, stopped us out up here, but always gives you another spot to short again. And this one sure did. So keep that in mind. And then if you flip to the other side, you can find little spots where you might want to start covering. And this actually marked the low into the close. So you may want to watch that video. Here it is again, same trade, right? It's just wash, rinse, repeat. That's what's going on out there. You have to take what the market will give you and get out of the way if you want to trade this market. But don't think you're waiting for some huge bounce in order to make money. It's just not there. So now we've broken 138 and we've broken major support, right? That was major support and we broke it. So tomorrow, if you break 136.60, okay, you can head back down, not to this 128 level tomorrow, but I think you're going to head down. I think it's going to be pretty. Let's get rid of this as well. I think this is going to be pretty messy if you can break that level, 136.60. So just watch this. You might trade around 137.5 tomorrow, just because you're dealing with option expiration. Now, as far as earnings, Pan had exceptional earnings. Palo Alto Network's earnings were just exceptional. Quarterly earnings came in at $1.79 versus $1.68. Sales were 1.39 versus 1.36 billion. What really set us off was our billings for fourth quarter, 2.32 to 2.35. You're looking at 1.53 to 1.55 in total revenue, which is substantially higher than this quarter. And you're looking at coming in at $2.26 to $2.29 versus the $1.79 you just came in. It absolutely crushed. And what did that mean for us? It means that you rallied substantially. And this is the kind of rally that you want to see. Look at this. So if we open here, we're going to have a bullish engulfing at the bottom of this chart and a nice H reversal. We're going to have to see how this plays after hours. But I'll show you this after hours on a chart in a moment. But just watch this level tomorrow. If you can get above 475 tomorrow and you get this kind of reversal, this could be pretty massive. There's a lot of people that were shorting this name going into earnings, which, again, you have to be really careful playing in the earnings. But here you are on 15 minutes after hours. And you can just see how all you've done is gap straight up and then just stay up here. And that's all you've done since you've been up here. Now, if you go and take a look at this, even on a 1 minute chart, take a look at this. Okay, here's your big move, then it gaps over, and now you're just sitting up here. So we're not even giving any of it back. And I think that's really important to note. You're not giving any of it back at all. So just kind of keep that in mind. I think that's important. Now, the exact opposite of that quarter is what we saw with AMAT. It's actually trading up a little bit from where it was. It was down to 105. At one point tonight, it actually went down to, and this was pretty fast, to 101. You know, I'm not sure how or why this should even trade up a little bit, but to me, I think that the quarter in and of itself was pretty abysmal. Seems like they restated something later in the night, but let's just go over what we have right now. $1.85 versus $1.90. No matter how you slice it, they missed. Quarterly sales came in at $6.25 billion versus $6.37 billion. Guidance was $1.59 to $1.95, which is huge, but it's below the $2.04 estimate. So they're saying they're going to miss next quarter. This is not what you want to see at all from a semiconductor company, a growth company. You don't want to be missing earnings, especially semiconductor equipment. And then you're looking at sales around 8.85. That's not really where you want to. None of these numbers are where you want to be. They're just not. And I think that that's something that you really have to think about. So for me, if it trades itself back up, I would just look at being short. If you're fortunate enough to get this short off at this level, 110.22, even after hours, I would probably do it. But I just don't see how this is going to stay up on I wouldn't say negative growth, because you are growing. It's not as bad as Cisco, but you miss numbers. So I like this, and if I can get that close to 10.22 tomorrow, I'll be all over it. Now, in regards to the Qs, let's just talk about this. All we did, let's get rid of the pre and the post data, all we did was come down and form a doji. It's all we've done. Now, will this doji hold? Will we get over this higher high? Until we do, there's no need to do anything here in regards to trying to think about being long. I'm going to save everybody a lot of time, and this is a great guide to use, and it's one of the guides that we've been using. See this level right here? As long as you're below the 5-day, you should be thinking about being short. If you're over the 5-day and it's curling up, try some longs. That's what we've been doing it's been working really well. So just something as simplistic as that can take a lot of the second guessing out. But there's nothing redeeming. You're in a downward channel, and I just really want to focus on two things. As bad as this market is, okay, as bad as this market is, this is what the VIX is doing. Hardly anything. I'm not really sure how we're supposed to put in a bottom if people are not going to buy puts and panic. So it just seems like it's going to be a hard time. And I really want to focus on this. So this was something that we wanted to see. This is really something we want to see, because if the hedges work, then people will start putting on more equity trades, right? They buy bonds and then they buy equities, and they use the bond money to help with their returns as they build up equity positions, which gives stability to the indexes. So just looking at this, this is the first time we've actually made, okay, a lower low since we put this in. So did it hold? No, but we undercut it 277, which is pretty nice. I mean, it's pretty nice. It's something that we want to see. Now, if you put in the 8 and the 5, you're below those. Let's look at the 21. You're below the 21. First time you're below all three of those in a while. Next would be the 50, but you have a way to go before that. And you can see this wedge down here. So if we get rid of all this, we could actually say we're starting to form left shoulder, head, right shoulder. And then if you break this neckline, that would give us the opportunity to watch equities actually find some level of support. Some, because right now we're bottomless. So just keep that in mind. It's definitely important. You want to see the 10-year yield actually drop, which means bonds are being bought. That's it. That's all I have. Everybody have a great evening and trade to win.